Alright guys, welcome to identifying advanced market structure like a pro. So let's begin. Alright, so what you will learn for those that are new to trading and don't know anything about the markets or market structure, what you will learn is what market structure is, type of trends and identifying them, identifying break of structure or reversals in the markets, identifying trend reversals and continuations. So those are for the beginners who don't know what market structure is or is new to trading. So advanced market structure, how I view market structure, I'm going to be sharing that with you guys. So you're going to learn why most traders get lost identifying market structure and enter the wrong trades. You're going to learn how I identify my main structural points. You're going to learn what main and internal structures are. You're going to learn how to use main and internal structure to identify what phase you are in the market. Are you in a pullback phase or are you in a continuation phase as the market resumes the trend? You're going to learn using main and internal structure to spot high quality setups. So, with that being said, let's dive in. So, which brings us to the question, what is market structure? So market structure refers to the overall movement of price that reveals trends, key levels, and patterns like uptrends, downtrends, or ranges. It helps us identify opportunities and plan our entries and exits in the market effectively. So in the market, we basically have three types of trends. We have the uptrend, which is the market trending up, going up. As you can see, this is an uptrend. The market is creating higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Another name for uptrend, or when the market is trending up, is a bullish market or the bull market. When the market is trending up, you would hear people call it a bullish market or the bull market. Then a downtrend or a bearish market. This is when the market is creating lower highs and lower lows, lower highs and lower lows, lower highs and lower lows, or a bearish market. I'm going to be teaching you guys how to identify this type of market structure cleanly, how to identify where the market is trending. All right. So we have the ranging trend or a consolidating market. This is when the market is just moving side to side. It's just moving, it's not really trending. It's not trending. It's just moving side to side, just moving up, down, up, down, up, down, just moving sideways. That's what we call a consolidating market or a ranging market. We're going to head into the charts later in this session to do some practical aspects. All right. An uptrend slash bullish markets. During an uptrend, markets create higher highs and higher lows. That's how we identify market structure in an uptrend. In an uptrend, the market creates higher highs and higher lows, higher highs and higher lows, and keeps breaking structure to the upside, keeps breaking structure to the upside. An easy way to identify the trend in the market is by simply drawing a trend line. By simply drawing a trend line. So you just zoom out a little, then you draw a trend line. That alone is going to tell you where the market is currently trending in, if it's an uptrend or a downtrend. So as you can see here, the trend line is indicating up, is going up. So it's showing us the market is trending up. All right. Downtrends slash bearish markets. During this type of markets, the markets create lower highs and lower lows, lower highs and lower lows. So during this type of markets, market create lower highs, lower low, lower highs. Each lower high is going to take out a previous lower low, then forms a new lower low that will give us a new lower high again, to take out the previous lower low. When it takes out the previous lower low, forms a new lower highs, forms a new lower high to take out the previous lower low. All right. Sorry, I'm new to this. So, anyways, so in a bearish market, the market breaks structure to the downside. It keep breaking structure to the downside. Another easy way to identify a bearish market is by simply just drawing a trend line. Like I said, it applies to both bullish and bearish market. Just draw a trend line at the top, from top to bottom. So that's a very easy way to identify where the market is trending, or you just zoom out of your charts and draw the trend line. All right. BOS, or break of structure, as the full meaning of BOS. What is a break of structure? Break of structure occurs when the market violates a previous high or low, indicating a potential change in trend or continuation of momentum. I hope you guys understand that. A break of structure occurs when the market violates a previous high or low. So when a market is trending up, when the market is trending up after creating a new higher low, and market then pushes back up, it breaks the previous higher high. So that there is called a break of structure. Hope you understand. So a BOS can signify a reversal of the trend as this. Okay, so like I was saying, as you can see here, the market was creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and created an higher high. Then price came all the way down and took out this higher low, which then signified a break of structure. So what this break of structure indicated was that, okay, sellers are ready to moving back to the market. It indicated a change in trend, a change in trend. So a BOS occurs when price failed to create new continuation structure, indicating a change in the trend direction, either from bullish to bearish or bearish to bullish. So it can happen. It can also happen vice versa, just as it happens here from bullish to bearish. Markets created a new lower low here, then created lower high, then broke this previous lower low here. This is also a break of structure. When market break this, is also a break of structure. Give us a new lower low, then came back up, lower highs, broke this structure again, lower low, lower highs, lower low, lower highs, and lower low. So as you can see, it's very easy to identify these trends. All right. It can also signify a continuation of the trend. Just like I said, when a higher low takes out an higher high to form a new higher high, then the new higher low that it forms takes out the new higher high that it formed. So that's what I mean. All right, let's head over to the charts and do some example and work. Okay, so let's look for a chart example of the markets in an uptrend. All right, so as you can see here, the market is trending up. Market is bullish. So it's very simple to identify the trend. You can just simply draw a trend line, and this just shows you that the market is trending up, that we are bullish. Okay, so let us identify our higher highs and higher lows. You can see here, this was our higher high, and this was our higher low. This was our new higher high, and this was our new higher low. So you can see when the market broke structure right here, when the market broke structure here, when the market broke structure here, because the market was bearish here before, then we broke structure, which was indicating a change in the trend. Markets created our higher high, then pulled back and created our higher low, then took off again, broke this previous high, which is also a break of structure right here, give us a break of structure, created this new higher high, pulled back, a mini pullback, and created this new higher low, then took off again, took out this higher high, a break of structure again, then give us this new higher low, and so on. Some people would have considered this structure, but this is not structure. This is not structure. We'll be talking about this in the advanced market structure. But for now, let's stick to the basic for those that are new. Give us a new higher high, higher low. Give us a higher high. Let's see. Sorry. Give us a higher high here and a higher low right here. Then give us a new higher high right here again. Higher high, higher low, higher high. Because it broke this structure. Then higher low, higher high. Then this right here, right here was the last higher high, and right here was the last higher low. This is also an higher low here too. Right here was the last higher low. So you could see that for a moment, price shifted momentum, price broke structure to the downside and started selling. Sorry. Price broke structure and the momentum shifted from bullish to bearish. Let's mark it out. So we could see this higher high was taken out, give us a new higher high right here, which formed this higher low. This new higher high was taken out, which then gave us this new higher high right here. All this right here, all this that happened was internal structure. All this that happened was internal structure. I don't really consider this structure. It was all internal. We'll talk about that in advanced market structure. So all this right here, this was when market shifted into a downtrend. So the market shifted into a downtrend that started created a mini downtrend that created lower lows and lower highs, created another lower high here, another lower low here, created another lower high with another lower low here. This was the last lower high that price need to take out before switching back to a bullish market. So when price took this lower high here out, it indicated a price has broken structure back to the upside. It indicated that price is ready to push back up, is ready to resume the uptrend, is ready to resume this uptrend. So it was the higher high and our higher low, give us a new higher high after breaking structure here. It was a new higher high. This new higher high now give us a new higher low. Then we add this expansive move, right here to the upside. This expansive move right here to the upside. The market retraced all the way back down here. All right. I hope you guys are understanding it. It's really not that hard. All you just need to do is just to practice. Practice, practice, practice. This is for an uptrend. Let's see if I can find one for a downtrend. Do some example for a downtrend. Okay. As you can see here, the market is creating lower highs and lower lows. Lower highs and lower lows. Lower highs again and lower lows. Let me draw it out for you guys. Try to keep this video short. Lower low, lower high, lower low, lower high, lower low, lower high, and the new lower low right here, lower high, and lower low, lower high. Some people will ask, why didn't I mark this as a lower high and lower low? Well, all this move, all this move that happened, all this move that happened inside here, all this move that happened here is all internal structure. All this move is all internal structure. We'll talk about that in the advanced market structure. All right. So as you can see, identifying the trend isn't that hard. You can see very easy. Trend line indicates the market direction. So, and also the markets will never move as um smooth as this drawing. You will never see structure as smooth as this. You will never see structure as smooth as this. Structure will never be as smooth as this. Instead, you will see something like you'll be seeing structure like this. Be a huge high, then this little retracement, then this huge expansive move, then a deep retracement, then this huge expansive move, then minimum retracement. You will never see it as it can. Sometimes price might expand all the way like this, then retrace back, then expand again, then retrace back, then might just give you some smooth move. So just don't expect to see markets move as smoothly as this. Don't expect it. You just have to use your intuition. You just have to use your intuition when trying to mark out market structure. You just have to use your intuition. Let's see if I can get an example for a ranging markets. Ranging markets, ranging markets. Let's see, let's see, let's see. Let's see. So, okay, okay. This is not really a perfect example, but you can see how the market was just being boxy right here. It's just like a mini example of what a consolidating slash ranging market will look like. Market will just be moving up, down, sideways, just going to be moving sideways. It's never really going to take out, it's never really going to like make any expansive move. Just going to be moving sideways like this. That is what a consolidating market look like. Let's con consolidating market. Example of what a consolidating market would look like. Just going to moving in ranges, just going to be ranging, moving sideways. Example of what it will look like. Okay, so I hope you were able to grab one or two from this first part of this video. So I'm going to see you in the advanced parts. All right. All right. All right, guys. Welcome to part two, advanced market structure. All right. So what you will learn in this part in how I view market structure, you will learn why most traders get lost identifying market structure and entering the wrong trades. You identify what phase you are in a trend, be it pullback or continuation phase. You'll be learning how to identify main structural points. You'll be identifying main and internal structure. You'll learn what main and internal structures are. You will learn how to use main and internal structure to identify what phase you are in the market. You'll be using main and internal structure to spot high quality setups. Note that this is just how I view market structure, and this is how I use market structure to get trades and trade ideas. Okay, so let's head over to the charts. So firstly, we're going to be talking about why most traders get lost identifying market structure and entering the wrong trades. Sorry, let me delete this. Why most traders get lost identifying market structure and entering the wrong trades. Yeah. So as we all know, or as we have been taught by some people, by some of our mentors, um, market structure is basically just markets creating higher highs, higher lows, higher highs, higher lows, higher highs. Then, when the market wants to transition into a bearish market has to break structure right here. That's to take out this low, then give us a lower low, lower highs, lower low, lower highs, lower low. But this is absolutely correct. But what we see in the chart is different, is a whole different thing. The reason why most traders get lost identifying market structure is because they fail to know what phase they currently are in the market. They fail to know what phase they currently are in the market, be it a pullback or be it a continuation phase. And they are most times trapped in the lower time frame like 30 minutes, 15 minutes, 1 hour, but trapped in the lower time frame and fail to look at the bigger picture, fail to look at the higher time frame. That's another reason why traders fail to identify market structure and where they are in the markets. For example, some traders will be like, okay, we broke structure right here. We broke structure right here. Market has given us a BS here. So I'm looking to start buying. I'm looking to start buying. Okay, well, we start buying. Then they get in a trade when the market retraces back, maybe somewhere around there, and expecting the market to go up. But instead, the market just comes down, hit their stop loss, and continue selling. They get trapped in the lower time frame and forget that the market is fractal and all. So, yeah. So, we need to know that there are two phases in a trend. When the market is trending, there are two phases. Two phases. We have the pullback phase or counter trend, and we have the continuation phase. This is when the market resumes the trend. So a pullback phase, a pullback phase, a pullback phase. What is a pullback phase? When the market is trending up, as creating higher highs and higher lows and higher highs. When the market is coming back, when the market is retracing, this is what we call the pullback phase. When the market comes back down to create that higher low, this is what we call the pullback phase. And when the market resumes the uptrend, is what we call the continuation phase. So this is pullback phase. This is a pullback phase right here. And this is our continuation phase. Like I said, the continuation phase is when the market resumes that overall trend. A pullback phase is when the market is retracing back, that is coming back to seek liquidity, take out gas before continuing the trend, before resuming back into the continuation phase. Most traders get trapped in the pullback phase. That is when when we're in a bullish market, most traders get trapped because they see the market selling. They fail to understand that those are just internal structures that you are trading. They're just trading the internal structure, and they fail to understand that they are in the pullback phase and they keep expecting the market to keep selling. Meanwhile, the markets will just reverse and start buying, and they end up losing their trades and their money. And they end up losing their trades and their money. So this is an example for an uptrend, the pullback phase and the continuation phase. Now for a downtrend, pullback phase. Okay. For a downtrend, when the market creates this lower high and the new lower low, this move back here, this move happening going back to the upside, this is our pullback phase. Then this move going to take out this lower low is our continuation phase. This is our pullback phase. This is our continuation phase. One thing you need to note is sometimes the pullback phase might not be as deep as this. Sometimes it might just be a little something like this. Sorry. I mean, this is our pullback phase right here. The pullback phase might be something, it might not be as deep as this, it might not come as deep as this, it might just be a little something not too deep. Then the market resume the trend, and we're in the continuation phase and we'll be taking only continuation trades. Sometimes the pullback might be deeper, it might come all the way back here, back to the top, after taking out liquidity from this side. It might come all the way back to the top here before resuming the continuation phase. Okay, so this is for downtrend, lower highs, lower highs. Move this down a bit. Lower highs, lower lows, lower lows. Hope you understand. The pullback phase is when the market is retracing down back to seek liquidity before taking off to form the continuation phase. That's for an uptrend. Then for a downtrend, the pullback phase is when the market is retracing up to seek liquidity before continuing the overall trend, which is a downtrend, and giving us the continuation phase. We need to know that there is what we call main and internal structure. Is what we call main and internal structure. This is our main leg, or main structure. This is for illustration. Main structure, main leg or main structure, and this right here is our internal structure. This is our internal structure right here. The main structure. This is our internal structure. And we have also an internal structure. Internal structure. So what is an internal structure? Let me draw that out for you. Example. So this is our internal structure. This is our internal structure. Then our internal structure will not be that structure that forms inside our internal structure. So, oh my God, sorry about that. Let's do that again. This structure that forms inside our internal structure. Okay, so let me zoom out and try and explain this real. So we have our main leg or our main structure, and we have our internal structure. So what is our main leg? Our main leg is this higher high and this higher low. This is our main structure, this or our main leg. Then the internal structure is what forms this main leg, or this main structure. Then the internal structure is what forms this internal structure. So we can see that the market is just like a tunnel that keeps going in and in and in, just keep forming the same structure in different time frame, the same structure in different time frame, and just keep going in and in and in and in. So this our main structure can be the daily time frame, daily time frame, and this internal can be our 4 hour time frame. Then this internal can be our 1 hour time frame. As this internal right here, this blue can be our 1 hour time frame. This internal is what forms this 4 hour structure. Then this 4 hour structure is what forms this our daily time frame main leg. Get. So when you want to trade, I will advise you only identify your main and internal structure. You just trade with that, with those two. So your main structure can be your daily time frame, your internal structure can be your 4 hour time frame. Let's head over to the chart. Let me explain better. So for example, this as we can see, the market is bearish here. As you can see, the market is bearish here. You see the market was first bullish, then we created this higher high and this higher low, then this new higher high, it swept this previous high, then price started with then price started retracing and broke this higher low, which now gave us our new lower low. Then price came back up, took out this internal structure, this internal lower high, mitigated the right order block here, give us our new lower high. Then that's our main structure lower high. Then started selling again to take out this main structure lower low here. Then give us a pullback again. Look how this internal structure lower high mitigated the right order block here, give us our lower high, sold off again. How this main structure lower low here, give us our solidified main structure lower low here. Look how this internal structure lower highs, lower highs, lower highs mitigated the correct order block here again, give us our lower high as our main structure lower high, then sold off right here. Some people will be like, why didn't I mark this as a break of structure? Why didn't I mark this as a break of structure? Well, this is not a break of structure. It is not a break of structure. It's an inducement point. It's not a break of structure. It's an inducement point. Just to fake out traders into thinking the trend has changed. It's an inducement point, not a break of structure. Where the valid break of structure is, where the valid break of structure would have been, was if price came back all the way up here. This would have been like, okay, this is our main structure break of structure here. This was an inducement point. It was just to induce trader into seeing another trend into the wrong direction. So as my price came back up here, broke this structure, be like, okay, we are looking for buys. Then we start marking out our POIs. So this is how I identify my main structure. All you have to do is just to zoom out, a bit. If your main structure is daily, just zoom out, you mark it out, you mark your main swing point. That's if you're in an uptrend, you mark the higher low that caused this higher high. That's, let's take for example, if this is the higher low, you mark this higher low that caused this higher high. Then you mark your internal structure. So it's the internal structure that builds the higher time frame structure. That's our main structure. The internal structure or the lower time frame structure, the internal structure or the lower time frame structure builds the main leg. Please note this, the internal structure is what builds the main leg, and it's still the same internal structure that we are going to use to know what phase we are in, whether we are in the pullback or whether we are in the continuation phase. Whether we are in the pullback like this, whether we're in a pullback like this, or we're in a continuation phase like this. Continuation phase as in continuing the trend. Please note this. Note this. The internal structure or the lower time frame structure is what builds the main leg. So let us now mark out the internal time frame structure or our lower time frame structure, knowing that the daily is our main structure. Let's mark out the internal time frame structure. So we need to go to the 4-hour. Now I can see it clearer. Like I said, the internal structure is what builds the main leg. As you can see the internal structure here. See, this is what builds this main leg, then this other leg. So our internal structure, where is our internal structure? So this was our internal structure, higher low, higher high, higher low. Then we add this expansive move to the upside, this higher high. Then this here was our break of structure points. This here was our break of structure point. This signaled to us that okay, we are now in a pullback phase. That means the lower time frame break of structure, that's the lower time frame break of structure, our internal structure BOS signals a pullback of the higher time frame. So that's telling us that we are in a pullback in the higher time frame. Give us this lower low, this lower high right here, then this lower low, then this lower high right here, then this lower low, then this was when price broke structure again. This was when price broke structure again. This was not telling us that price is about to continue the main trend, that is the uptrend. When price broke structure here, give us this higher high, then came back down, give us this higher low, went up, give us this higher high, higher low, higher high. Let me use another color for this. Higher high, then give us our higher low, higher high, then did an inducement here, higher low, then took out this high, higher high, then we broke structure, signaling a pullback on the higher time frame again. That means we're having a pullback. A lower time frame break of structure signals a pullback on the higher time frame. Lower low, give us this lower high, then broke this low, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then we did an inducement here. We did an inducement here. This was our lower high. Since this was an inducement, this was our lower high. Then right. So I hope you are understanding it a little better now. I hope you are understanding it a little better. All this structure here, all this was just inside another time frame, maybe the 1 hour. That's our internal. This will be our internal structure that forms this internal structure. That's our internal structure is what forms the internal structure. Then our internal structure is what forms the main structure, which is our main leg. Hope you understand. So a counter trend BOS, let me go here to explain that. We need to know that the higher time frame pullback, that is our daily pullback, is caused by internal lower time frame structure. It's created by internal lower time frame structure. You need to understand that. That is, after a lower time frame BOS, for example, now we are in a downtrend here. We're in a downtrend here. The counter trend BOS, that is this BOS here, so we call it counter trend BOS on the lower time frame, which is our 4 hour, our internal structure, signals a pullback on the higher time frame structure. So what it's telling us is we are now in a pullback phase of the higher time frame structure. So what will price do? Price will start creating new lower time frame or internal structure, higher highs, higher lows, higher highs, higher lows, until it takes us enough liquidity to then resume the trend. So a counter trend BOS on the lower time frame, that is this counter trend BOS on the lower time frame, signals a pullback on the higher time frame structure. That's this pullback right here. While a pro trend BOS, that is this BOS here, a pro trend BOS, that is this BOS here, signals on the lower time frame, signals a resumption of the higher time frame structure. So a a pro-trend BOS, a pro-trend lower time frame BOS signals a resumption of the higher time frame structure. So it tells us that we are about to resume continuation. We are now in a continuation phase. The market is about to start trending again to resume the overall downtrend. So same applies to an uptrend. A lower time frame counter BOS, a lower time frame counter BOS on our internal structure signals a pullback. This is an uptrend. That means we're having a pullback. We're retracing. We're having a pullback. While a pro-trend BOS, on that same lower time frame internal structure signals resumption of the higher time frame structure. That is, we are resuming the trend. We're about to start buying again. Hope you understand that. So let's head over to the chart and find some examples. Okay. So for example here, like what I first said, a counter trend BOS on the internal structure, on the lower time frame internal structure, signals a pullback of the higher time frame structure. So let me mark that out. So where is our break of structure here? This is our valid break of structure. This is our valid break of structure right here. Let me use this. This is our valid break of structure right here. This is our counter trend BOS that signals a pullback on the higher time frame structure. Counter trend BOS. That signals a pullback on the higher time frame structure. So after this BOS, you see price still came back up, give us lower highs, lower low, lower highs, then a new equal low, because these two lows are equal. Then we broke structure, which is our pro-trend BOS, our pro-trend BOS. And what is our pro-trend BOS? Our pro-trend BOS on our internal structure signifies a resumption on the higher time frame trend. Signifies a resumption on the higher time frame trend or higher time frame structure. So this is our counter trend BOS. This is our pro trend BOS. Our pro trend BOS that now signifies a resumption of our higher time frame structure and the trend. Some people will be like, why didn't I mark this as a BOS? No, this is not a BOS because this is our main swing structure right here. This is our swing structure from this lower high to this equal low to this new higher high that it formed. Before you will consider a break of structure, price has to come all the way down to take out this low before you will say, okay, this is our valid break of structure. Price has to take out this low. But apart from that, any other structure that is inside here is just internal structure. It's just internal structure and it's just inducements happening. So where did our next counter trend BOS happen right here? You can see that it happened right here. This is our counter trend BOS on the internal time frame that signified a pullback on the higher time frame structure. Counter trend BOS. Then price came all the way back down here to break our main structure, our main leg structure. So once price break this structure now, we know that price can come inside here, take out any of this internal structure high before resuming the main structure trend again. So let's mark out our internal trend here. Where is the internal structure making sense here? Where is it making sense here? Okay, right here. This is our pro trend BOS. This is our pro trend BOS that signifies a resumption on the higher time frame structure. A pro trend BOS that signifies a resumption on the higher time frame structure. As you can see, price didn't take out this low. Price didn't take out this main structural low, this main leg low right here. Price didn't take out this main leg low right here. Price didn't take out this main leg low right here. Instead, what we did was we broke structure again, which signified another pullback inside this. That's still inside our lower time frame internal structure. We're still forming another pullback inside. Then price created this higher high, higher low, this new higher high right here, which was not taken out by this break of structure. This break of structure here now signaled our resumption of the pro trend. This internal break of structure now signaled our resumption of the pro trend. Our resumption of the pro trend, then give us another break of structure here. This was also one. The counter trend, you can see that the market is just like waves within waves. Sometimes we have to go back up, take out liquidity before pushing downward. We came back up to mitigate the right order block here. We're now pushing downward, continue the trend. So where was our internal structure? Where was our internal structure counter trend BOS? Where was the BOS here? This was the valid BOS right here. This was the valid counter trend BOS that signaled, okay, we are now in a pullback phase. We're now in the pullback phase of the higher time frame structure. And this was the internal structure trend BOS that signaled we have resumed the higher time frame main structure. Sorry, this was the internal structure. This was the pro-trend BOS on the internal structure that signaled the resumption of the higher time frame structure. Sorry about that. Then you can see kept on breaking structure. So how do we know how do we know if price is ready to resume the higher time frame structure? How do we know if price has grabbed liquidity? Well, that depends on the order block it mitigates. That depends on the order block it mitigates. Right here, you can see that we mitigated the right order block right here. That's on another time frame, on a fractal time frame, an internal time frame. Mitigated the right order block here. Then price started selling off. Then price broke this structure. When price broke this structure, that signaled resumption. Okay, we've resumed. Then we can now look for our entries. Now look for our entries. This was an internal inducement. That's on another time frame. Uh, yeah. This was an internal inducement on another time frame. Then mitigated another block here and sold off again drastically. Sold off again drastically. Why didn't I mark all this? Why didn't I mark all this structure right here? Well, I didn't mark all this structure because all this was just internal structure. Maybe on the 1 hour, this would be a BOS here, another BOS here, an inducement here, mitigate the right order block, sell. There are setups inside here, but this is on the 1 hour. I'm just trying to make it. I don't want to go into deep. I don't want to go into the 1 hour, start marking out structures upon structures. I don't want to confuse anyone because sometimes it might get confusing. All right, all right. So I hope we understand now that an internal structure BOS, an internal structure BOS, or a counter trend break of structure, signals a pullback on the higher time frame structure. Then that's a pullback. If we go to our daily, that is this pullback. Then the pro trend BOS, that is this internal structure BOS right here, signals resumption of the higher time frame structure. So when we look for a trade inside here, this will be our first target, our first take profit target. This high will be our first target. Then this main structure higher high, right here will be our second target as our second take profit. Let's go to the 4 hour and let's see how that looks. So this is how it looks when we get in our entry somewhere here. When we enter somewhere here, this will be our TP1. Then this will be our final TP, our TP2, TP1, TP2. Correct. So when I would advise that when you want to trade, you only identify your main and internal structure. For example, only identify your main and internal structure. That way you don't get lost in where you are in the trend. For example, if my main structure is the daily, my internal structure is the 4 hour. If my main structure is the 4 hour, my internal structure is the 1 hour. If my main structure is the 1 hour, my internal structure is a 30 minutes. If my main structure is 30 minutes, then my internal structure is 5 minutes. I'm not saying that this is how it is or this is how you should do it. I'm just telling you this is just an example. This is how I do it. It's just an example. I'm just giving you guys an example. Okay. Now, how did how did how did I know that price was going to take out? How did I know that price was going to break this main structure lower low? Depends on what price mitigated to the left. So price mitigated the right order block. Let's check it out. Let's see if we can check it out. What did price mitigate? So as you can see, price mitigated the right order block here. Price mitigated the right order block here. Doesn't need to come, just need to touch it, which then caused this huge shift. So all these other blocks that are here are just smart money traps that cause pullback for price to go inside, to go into the internal structure, take liquidity, mitigate another block, then continue selling. So what the price mitigate here? Price probably mitigated an SMT here too, because it resumed the trend. Mitigated an SMT here too. What is an SMT? An SMT is smart money trap. An SMT is a smart money trap. To trap traders into thinking this is the correct order block. So even though when traders enter from here, all what will be in their mind is price will just keep buying and keep buying and keep buying and keep buying, taking out all this high. But meanwhile, it's just trap. It's just to push price back up to seek liquidity before resuming the trend. So that's it for main and internal structure on a downtrend. Let's see if we can identify that of an uptrend. Same thing applies. Same thing applies to an uptrend. Same thing applies to an uptrend. Just like it is here, a counter trend BOS signals pullback on the higher time frame structure, and a pro trend BOS signals continuation of the higher time frame structure. So assuming pricing mitigates this correct order block, what would have happened is price would have just retraced back, take some internal liquidity, then resume, then take out internal structure right here. That has resumed the pre-trend BOS. Give us a pre-trend BOS right here and resume the higher time frame structure. Okay, so it will be something like this. Let me see if I can replay. Okay, assuming let's assume all this didn't happen, and this was where price currently is. Assuming all this didn't happen, okay, let me delete this. Assuming from this place nothing happened, this would have been our pro-trend BOS. The signals resumption of the higher time frame trend. So have been our pro-trend BOS, and this was our counter trend BOS. Counter trend BOS. That's assuming price didn't mitigate the correct order block here. Assuming this was an SMT that just caused pullback, this would have been our approach BOS for price to continue buying up. Okay, all right. Hope you guys understand everything I've said here. So, what are the key takeaways here? So, firstly, you need to identify, when identifying structure, you need to identify where in the price cycle you are. Where are you currently in the price cycle? Did you just take out a main structure higher high? If you just took out a main structure higher high, then you should be expecting a pullback. You should be expecting a counter trend BOS for a pullback. So you could look for trade. Maybe after the pullback happen, you could look for trade inside here to sell, then sell down to your POI. That is your point of interest, where you will know that, okay, assuming this was our valid point of interest right here, so the correct order block price mitigated, we will know that, okay, price is going to break this high, which will now give us our pro trend BOS. You need to know that. You need to know where currently you are in the price cycle. That's the first thing you need to know. Are you in a pullback phase, or are you in a continuation phase? That's, as price already taking out this pro trend BOS, which now signals we are in the continuation phase to look for continuation trades, or are you in a pullback phase? That's as price giving us a counter trade BOS, which now tells us that we are in a pullback phase. That price is pulling back to seek liquidity before going up and continuing the trend. Always identify your main and internal structure. Always, always, before anything. Always, always, just identify them to know where you are. Identify the higher time frame trend. You need to know the higher time frame trend. You need to go. Sometimes you might go to the weekly, then from the weekly you drop down to the daily. Then you use your daily as your main structure and your 4 hours as your internal structure. Then you use your daily main structure as your target, or your weekly, then your weekly structure as your bigger targets. You need to identify the major expansions that makes the new higher highs and the pullbacks. The major expansions that made this new higher, you need to be identifying them, where the major expansions are. Then you identify the internal moves that follow it. So, with that being said, always build a narrative of price from the lower time frame to the higher time frame, and from the higher time frame to the lower time frame. Like I said, always build a narrative from lower time frame to the higher time frame, and from the higher time frame to the lower time frame, to know truly what phase you are, where price is, and where price is going. Once again, a counter trend BOS, a counter trend BOS on the lower time frame signifies a pullback on the higher time frame structure. That's this pullback. Why a pro-trend BOS on that lower time frame, our internal structure, signifies a resumption of the higher time frame structure. Please note that. That's why I'm mentioning it over and over. You have to note that. Also, pro-trend trades are the highest probability trades to take. What do I mean by that? I mean the counter trend. If you take a trade right here, you have to be setting TPs. You have to be monitoring the trades and know that, because price can reverse from here, can reverse from here. If it has grabbed enough liquidity, it can reverse from here, it can reverse from here. So a pro trend trade, for example, if you take this trade now, you know that price is going to take out this internal high here, take out this internal structure high, then target this main high. Then you can keep targeting other highs on the left. Don't get stuck on the lower time frame. Never get stuck on the lower time frame. Don't get stuck on lower time frame. If it's looking too choppy, zoom out to the higher time frame. Go to higher time frames and try and identify things. Okay. I hope you guys like this video and how I explain things. Please like, subscribe, share, follow me on Instagram, join my free Telegram channel. I'll be calling trades. We'll go together. You guys get to know me better there. The link is in the description below. For those that don't know me, you can watch my first video I dropped. Get to know more about me and see my face. Alright. Please like, subscribe, share. I'll see you on the next video. Next video is about order blocks and imbalances. Alright, see you guys later. Peace.